Hello everybody, we are back with the result season, and as always we are kick-starting this season with Accenture results. And this quarter becomes so important because everywhere you will see the murmurs, you will see the speculations that there is recession coming. And why is that recession coming? Because Federal Reserve is raising rates to control the inflation in US. And there are so many factors behind this inflation, which is about over 40-year high in US. So this is kind of never seen scenario in US. Therefore there are a lot of fears that probably this will result in recession. So there are people who talk about recession and there are people who talk about mild recession. We hope both doesn't happen. See, in US the interest rate have gone over 3%, 3.25% to be precise, right? Just yesterday there was a 75 basis point hike in US, and the current generation has not seen this kind of inflationary environment in US. Therefore what Federal Reserve is trying to do is raising the interest rate. Therefore the people will have less consumption power, right? By doing that, maybe the companies will produce less. When they produce less, the whole economy will go through some pain, and that will control the inflation. But we must need to be careful that this inflation is not normal. It is quite, because of lot of external factors, this inflation has reached where it is, including Russia and Ukraine war and lot of geopolitical tensions. We were just coming out of, let's say, the COVID scenarios. So we are living in uncertain times. Keeping all these things in mind, we can tell you this quarter becomes really important. And what we are observing is, again, Accenture is posting robust results. However, there is a catch, and we will talk about that, what that catch is all about. But Accenture is posting great results, and when we talk about those results, you will get to know how strong those have been over last 1 year. So let's dig down in the numbers quickly, and then we will talk about some other elements at the same time. So here we can see for the fourth quarter, right, revenues have increased 15% in dollar terms. In local currency terms, it's 22%. Remember, local currency means, Irish. They are headquartered in Ireland, right? And what's important is this operating margin is expanding by 10 basis point. This becomes very important because we have seen the companies, right, the Indian companies especially, are really under huge pressure. Operating margin, TCS, which always clocked about 25-26% of operating margin, right, bare minimum, have come down to 23%. Infosys, which were about 23-24% range, is around 20 or less than 21 now. Similarly, Wipro is 15%, which was always about 20% or going above that figure. So there has been a lot of pressure on companies to improve their margins, but one company, which is Accenture, is improving that margin. How is that possible? So my own observation is that probably Accenture is becoming too big. It is becoming like an Apple of the IT services industry, right? So they go to the market, they set the trend, they charge higher, they pass on all the supply side pressures to the customers, because they have that kind of power, they have that kind of domination in that segment. Companies are really paying them bit more than normally we have seen in the industry. That is true from what these numbers are, especially if you look at the salaries Accenture is offering to Indian resources. I have come to know that 30 lakh is becoming a new normal in Accenture for, let's say, a grade 9 employee, or probably grade 8 employees. So that's never been like that. Earlier, the bracket used to or tend to get over at 20 lakh, right? That is a big change. So what's important now, if you look at the fiscal full year, their revenue were about 61 billion dollars, a huge increase of 22%. So think of it. So they have grown by a huge margin last year, right? And it is obvious that when you have grown that big and you have become, right, you have your balance sheet has grown up big, it is normal to expect a relatively mild growth in the subsequent year. And this is what is going to happen. We will talk about that, because they have guided about 8 to 11% revenue growth for next year. So not getting into details of the earning per share and all that, what's important is new booking number. That's very important. 18.4 billion dollars in new booking. This is another record, right? And the full year booking number is 71 billion dollars. Unheard of. I have not heard that kind of number. So 61 billion revenue, 71 billion dollars order book they have, which they have to execute in future. So if you look at their 2023 guidance, I was talking about 8 to 11% in local currency, right? That's again a robust number, but because this is coming on top of 61 billion revenue, that's why the numbers might look relatively mild. Let's look at a better infographic. I would say there is nothing different, but it is easy to read. So the revenues are 15.4 billion dollars, right? An increase of this size, 22.4% in local currency. Very important. There are different geographies. America is growing by 18%, Europe is growing by 26%. Likewise, the other markets are growing by 26% in Q4. Please remember, Accenture's Q4 means it's June, July and August quarter, right? At this time, their yearly cycle starts from September to August. Let's look at the industry vertical. Their communication and media technology vertical is very strong thanks to the 5G. Financial services, which is banking and finance, is very strong. And health and public service, as we all know, we are living in COVID times, so this is again going very strong. We talked about this operating margin, an increase of 10 basis point, a very important figure here. So they navigated this COVID and this inflationary environment right now without any dent in the margin, in fact improving that margin. We were talking about 18.4 billion dollars of order book. Look at their 4 verticals: cloud, song, industry X, security. So all are growing double digit, and at least these 3 are growing very strong in double digits, right? Let's look at yearly numbers again. North America grew by 23%, where the total revenue size is big. Industry groups, you can see, all are growing in high 20s, right? On the upper end of 20s over here annually. Okay, we were talking about how their new booking numbers are reflecting over here. If we separate out their individual contribution from different businesses, cloud, song, industry X and security, it's turning out really nicely. Let's move next. What do we see over here? We want to talk about the new booking number, because new booking number is 18 billion dollar. That reflects the future demand, right? And that should really give assurance to a lot of people who are worried about the future in the technology investment space. And that is why you must have seen Indian IT companies are down 25% or 30% from the top, right? In fact, I am one of the person who is actually losing money because of the IT sector investment. Let's look at the Q4 number. Q4 number was about 15 billion in new order book, last year, that means the same time last year in 2021, when things were looking up, we had seen Accenture's order book was very solid, 15.02 billion dollars, which has now gone to about how much, where is that, 18.39 billion dollars, right? That's huge number. Where do you see this number? Look, even Infosys, if we talk about the second biggest company from India, their balance sheet is about 13 billion dollars. Cognizant's annual revenue is about 18 billion dollars, and the Capgemini is around the same number, right? So Accenture has become so big. Now another important aspect is attrition. Everybody knows that IT industry is struggling with attrition, but what's interesting here this time, we see, first of all, their utilization ratio is very strong. Their utilization ratio is very strong, which is 91%, and this has come down a little bit though, which was 92% last year, but it is still strong. What's interesting is their quarterly attrition is about 20%, which is consistent. Last quarter it was 20%, this quarter it is 20%. What that reflects is maybe people are so there is that saturation, right? Enough is enough. No matter how much people leave, that is not going to be, that 20% bracket will not be breached. Things like that are happening annually. That translates to about 19%. And going forward, because the environment is becoming challenging, probably we will see this will be moderated. One important factor is their employee count. Last year in August they were about 624,000 people. Now they are 721,000 people. That means last year, despite losing 20% of their workforce yearly or 90% of workforce yearly, they added 100,000 people net. That means their HR was working 24/7, and you would notice that in their hiring trend. A lot of you would have noticed that. So this was about the headline numbers, and we see this demand is still strong. However, the inflationary pressure is hurting the IT companies' business. If you are in IT, then probably you do not need to worry about the external factors right now, but be careful, be watchful. If you are an investor like me, you are already losing money in tech stocks everywhere. By the way, when when one sector is down, probably down by a big margin, probably it is a good prospect to go up quickly. Maybe it will take 6 months or an year, but if you are a long-term investor, maybe there is a lot of money to be made. Choose the right names and ride out this temporary phase. I hope you got some idea about the environment. With my next topic, I'll try to come back as soon as possible. Till that time, take care and goodbye.